G'day guys, welcome to a brand new week of Ttr UK Session. This is Jeff talking to you live from Hobart in Australia, or just north of Hobart, northwest of Hobart if I'm completely accurate. And it is, I hope, right time of day. We've just gone backwards, daylight saving time. So I hope I'm not here 2 hours early. That would be to know something is actually working. But I think that's the case because when I look at the Forex Factory, which is exactly what we will do right now, it tells me that currently, actually I didn't check this, DST on, okay, I'm on London time here, right? So it is now 7:36, which is perfect because that means we're 24 minutes away from London Open, and that's exactly where we need to be. So fortunately I've got the time right. I'll just share my screen. That would be a good idea. And if that works, honky dory. All right. So Forex Factory for today. My filter tells me that there's absolutely nothing happening in terms of news events. If I turn my filter on a little bit less strict and go to yellow events, which is low import, we see that there are a few more things on today, specifically around the yen and the Aussie earlier on. Look, I'm not going to bother too much with those because I don't think they've had much of an effect or going to have much of an effect on the market. So we'll just skip by them and move on to tomorrow. I'll get rid of that filter actually because I don't want to take any notice of it. And here we find that tomorrow, in terms of medium to high level importance, we've got one thing happening. Wow, what a slow start to the week in terms of news or in terms of data releases. The Federal Open Market Committee member Clarida will speak to us. Why? Title: The Fed's Review of its Monetary Policy Strategy, Tools and Communication Practices at the Federal Reserve Bank of Minneapolis Spring Institute Conference. Audience questions expected. I guess since we haven't had the FOMC, although we've had plenty of people talking, I'm sure we've had plenty of people talking since the FOMC statement. I think if we cast my mind back 2 weeks, there were a lot of FOMC people talking at some conference somewhere. So I'm guessing that there won't be too much new in the FOMC statement upcoming this week, or the FOMC statement, the minute release, or release of the minutes, shall I put it that way? Where does that happen? That happens here on Wednesday, April 10, on top of the ECB press conference and the interest rate announcement, of course, which happens at the same time. Well, that's not quite true. It happens 45 minutes earlier than the press conference. That's going to be the main focus of the week, I would suggest, outside, of course, of that wonderful, wonderful thing that we've come to appreciate into our lives, not known as Brexit. So on Friday, that was supposed to be the new deadline. Yeah, the new deadline, where we were supposed to know if we've actually got a Brexit, if what it looks like, etc., etc. Now that may or may not happen. I'm not even going to pretend that I know anything about that. I absolutely don't. And with any luck at all, Ash will be up to scratch with that if and when we see Ash shortly, one would think. So, what gives, guys? What gives? Outside of those two events, we've got CPI figures coming out from the States, GDP figures, the monthly figures coming out on Wednesday as well. On the pound, we've got oil meetings all week, not all week, all day on Thursday, and we've got some purchasing. PP, what's PP? PPI. Finished goods. Okay, so that's the manufactured goods index being released in the US on Thursday. Look, I don't know outside of those big ticket items that there's too much going on, to be fair. But when I say outside the big ticket items, OPEC meetings, FOMC meeting minutes, but again, I think we've had quite a few people speak prior to that, so I don't think there's anything terribly new come out of that. Maybe reinforces the dovishness of the Fed once again, to maybe a little bit of pressure on the dollar there, but maybe not. The CPI figures will probably be a catalyst for 0.3% tipping a rise there for some volatility in the market. We shall see, and of course the ECB press conference, as always, will be of interest. All right, let's go back in time, shall we, to last Friday, which of course was the NFP release, and the number was 196k. That's around about the par figure in terms of what we expect out of the unemployment numbers, or the employment change rather, out of the US. The unemployment rate in Canada was steady. That's good for the Canadian dollar, yet the employment change was negative. Not so good. Not so good. And I don't know what happened to the CAD in regards to that, but we'll have a check of that, no doubt, and see what we can find. We've got oil. Well, yeah, skyrocketing is probably the word. It's certainly very strong and going skyward. That would tend to perhaps counter that bad number that came out on the employment scene on Friday with the CAD. So where do we go, guys? What do we do? Where's our focus for the week? Well, I'm going to entertain the thought that we can trade the pound and the euro, but I'm not going to be that keen, as I kind of closed up shop on both those currencies late last week. And what I've seen so far, or since that time, has kind of encouraged me a little bit, because being, whilst choppy, not completely unpredictable. So I'll be prepared to trade them. Let's see if we can, shall we? All right, let's go to the charts, and we'll start with the euro. Why not? Now, the euro, I continue to talk about this level 113.60, and the reason I continue to talk about that level is because we have been to this level many, many times, and it is super significant. You can see how the market turned. A bit of a false break of that level, to be fair, but you can see how many times it was tested and tested and tested and tested and tested before it broke through. In 2017, went right up to 124.5, and then came off to where? Guess where? 113.60, where it bounced. Came back there again, spent a lot of time there, got off it, came back to it, off it, back to it, and underneath it, back to it, underneath it, back to it. That's where we spend a heck of a lot of time when we're in this area of the chart. So big signal where we've come off not only that 113.60 level, but the monthly pivot that was 3 weeks ago. And you'd have to say we've been bearish since, but we've been unable to actually break the shackles. And the shackles, of course, being this level here, which is around about the 112.25 mark, something of that nature. Look, it's hanging on by a thread, in my humble opinion. And if these levels actually go, and we're so close to them going, that it's simply not funny. But one thing we haven't had is the bounce off this level for a, well, let's say fourth time since late last year. And I'm kind of of the opinion that has to be the case. It has to happen. There's no such thing as has to, of course, when we're talking markets. But in my opinion, I just think this is due for one more shot, at least at this level, and maybe even back up here around the 115 mark. That's kind of where I'm at with that. And although it's a mess, it's really given me signals that it can turn around here and go long. I won't say I'm a super bull, but it's looking like it wants to get back here to me. Now, I'm still in two positions short. One that we entered way back here, and the stop on that is now down here above these swings. I think that's probably as safe as we can make them, because I do think if we get beyond there, then we're headed back to 113.60. So, no matter where I put my stops, they're going to be vulnerable in this area. So I think that's probably as tight as I want it and as loose as I want it, if you understand what I'm saying. But I think if we're getting back there, we're headed towards the 115 mark again. The second entry, I've still got my stops at entry, which is here. And I guess that's a little bit of insurance that the monthly pivot may act as resistance if we do get here and don't go towards the 115 mark. So kind of okay with both those. What do I think now? Well, I think now that we're still in bounce mode, and there's a pretty evident inverted head and shoulders sitting there. I've got my neckline chosen as this one. I wouldn't mind being in this long right now, to be fair, but I can't see a way in for me right now, except if we get maybe a retest of the daily pivot and the weekly pivot, or the weekly pivot. So on the smaller time frames, that's kind of where I'm at, and looking for an entry, getting some profit off the table here, but giving it maybe a little room, as I've just discussed. I think there's potentially the reversal on here. So I guess I'm bullish, kind of short-term bullish the euro for today, and if we do get an opportunity, I think the best case for me is going to be down here. So the retracement that I'm talking about, the retracement on this move that we've had already today, back down to retest the pivots, and if we can find a confluence area over here later on, break it, consolidate back above it, retest it. I'm talking probably US session before that's even going to be a possibility, but that's kind of where I'm at. If it's to come off resistance, then maybe, just maybe, we could play it as, I don't want to do this, but if it sets up, then it sets up. Maybe a break, take out this high, come back and retest this, and then look to trade it long up to there. It's kind of where I'm at. I think I heard Ash enter the room. Mate, are you there?
You did, mate. Yeah, sorry I'm so late. That's the joys of trying to get a 2.5-year-old out the door. So
yeah, nothing hard about that, mate.
more of a challenge than trading, which is saying something.
Indeed. How you doing?
Yeah, pretty good, mate. Pretty good.
That's the shot. What's going on?
Well, I mean, it's that the markets have obviously rallied quite significantly over the last week. Actually, I am looking for some retracement really over the coming days. I don't think it's going to be that significant, which is why I'm still a bull really now. But I have just got a bit of waiting to do. Let me show you what we've got here.
Sure.
I hear you on the euros. It's difficult, isn't it, to know. I see numbers today so far. Have you talked about the data releases today?
Yeah, look, I did briefly, but I don't tend to take too much notice of those low impact figures. What do they tell me?
I think the thing with it is that when I look at the numbers, and you're absolutely right, they are low impact, but by the same token, they still kind of give us a bit of a read.
Sure.
And I think the fact that we've got, the yen is always quite significant, because when it comes down to any confidence that's out there in the market, any kind of safe haven play, or any confidence that's out in the market, if the yen can still hold, or if the yen is negative, then it makes it a really attractive proposition. If we are super bullish at any point, and I think the fact that the numbers in Japan are still weakening. Economic watchers, it's weakening again. Consumers' confidence is weakening again, and all this sort of stuff is going to point towards the state of the economy somewhere. Where it's all linked is going to be the bigger numbers, but it's all kind of filtered through You know, if the consumer's not too confident, then that does suggest that that job growth won't be there, and obviously that kind of has a knock-on effect to inflation and everything else. So,
Yep.
The fact that we've got this this weaker yen doesn't suggest, when we look at something like the FTSE 100, that that we should be, you know, super bearish, really, the market, you know, because well, in some respects, I suppose it could, because it does suggest the stock markets, if you like, in a certain part of the world aren't doing so well. And what it comes down to, let me look at this on the Nikkei. The Nikkei has broken now to the downside. We can see this on an hourly chart, that that the Nikkei has broken through some levels here. There's a little trend line along here that that it's taken out, and it's taken out to the downside rather than the upside. So because of that, that would, you know, really filter through into some weaker data. We have been held up by the weekly pivot, and looking at the 4-hour chart, pretty aggressive bar as well. So when we've seen the rally in stocks across the globe, and it is across the globe, you know, we see the yen going up, we see the S&P moving towards some all-time highs up here. You know, it's a little ways off, but it's moving towards it again, climbing that that wall of worry, if you like. Then these markers do actually start to play much more of a significant role. And it's the same with the FTSE 100. You know, everybody's really waiting to see what's going to be the next catalyst that can push us forward. And if the global economy, i.e., first marker from Japan, isn't doing so well, then no, that's not great for the currency. But truthfully, we also need to kind of take into account what that means for the you know, the economy of the globe. And the FTSE hasn't broken down its trend line, but it is under this this daily pivot. If it breaks down that trend line, then you would suspect weekly pivot is obviously going to be a first target. But there's a lot to come. There's a long way to come down here. I'm going to bring in a little clean chart and show you what I mean by that, because the weekly chart is the real telling one. You know, last week was a huge push to the upside. Obvious that there could be some support around about 7,300, but the next level really is going to be this this 7,200. That's the area that I'd like to pick this one back up, you know, to the upside. But it did break through some significant points, technically speaking. So that the reason that those numbers play a part for me is that if I'm going to be going long today, then I need to get I need to have a decent reason with a market which is so overblown. You know, it's a bar like this does not suggest a downside by any stretch, but it also suggests that the market has got a little bit overextended, and a minimum, a pause would be something that I'd want to see. Now, obviously, pauses don't always happen. We see back here that the market just continued to rock to the upside without any kind of break on it at all. But it is fairly rare. You know, oftentimes you'll see it.
Just interesting that while you're on that, mate.
Yeah.
That's happened after a pretty significant bear push, or a push to the downside.
Yes. Yes.
Have a look at the current situation. You're probably already in phase 3, or you've just gone through phase 3 on that chart, and that's kind of where you don't tend to get, in my opinion, a long run without retracement, because it's already in that rally retrace mode, if you know what I'm saying.
Yes, you're absolutely right. So if you think, well, this is phase 1 here, and this phase 2.
Yep.
And then phase 3. Yeah, absolutely. Do you know, mate, you should definitely study Elliott waves. You think like an Elliott wave theorist without even realizing it.
Maybe I wrote it.
I mean, the interesting...
Got his name to it. He pinched it off me.
Yeah. The interesting price here is this point here. You know, this is the real area, and that would suggest another 200 pips to the upside before you know, anything really genuine. But I still think that we would probably come down first before popping forward. So I would be looking for some downside. But again, you know, I've got to think, what's the catalyst really? Because just the fact that the market is a little bit overblown here just suggests to me that we're much more likely to get sideways price action than a move in any specific direction until the next flurry. Now, the market can continue to react without any information, but when you get a kind of a new week starting, then things do change somewhat on that front. I also want to bring in just one other thing for you as well, and I'm hoping that this will help people a little bit. This is the statistical probabilities of the FTSE 100. Now, there are plenty of websites that do this for you. My personal take on it is I suppose twofold. I'm forced to do this because there's not many websites which provide FTSE 100 information, so I have to do this myself. But there is a huge benefit to doing it yourself. Now let me just quickly bring it up here. Where is it? This one here. Unfortunately. Okay, now let's bring up this one instead. There we go. If I'm going to bring up two, I'll bring up two for you guys. And there's no reason not to do this yourself, and it's actually good practice. So this here are the months. Okay, these are the months of the year for the FTSE 100, and it gives you the kind of it gives you whether they're bullish or bearish months. So 40% bullish would obviously mean 60% bearish. Now we are in month 4, and you can see that the highest kind of months are February, April, October, and December. They tend to be the best months in the FTSE 100. Mm-hmm. So we're already in we're in April, so we know that the FTSE 100 in April tends to be a bullish month. So we wouldn't be coming off. Interestingly, May is a 50-50 month. The seller may walk away, doesn't completely kind of compute because it's a 50-50 month. It's usually sort of June when it really starts to weaken again, and then it starts to pick up towards the end of the summer. So we're really looking for this last, there's one more month of a push, and then maybe we start to come down. So what that means is the market is likely to open above its is likely to close above its open. Now, if we bring in a monthly chart here, we can already see that it's well and truly in that area. So it could come anywhere now, could be bearish from here on in, and it would still qualify. So all that tells us is that really that the buying should have started at the low end. But when we come into the dailies, now I haven't done weeks, and I intended on doing that, but actually this is a little bit more detailed. These are the trading days of the month. And we can see that the first week does tend to be, on the whole, around about above 50%. We have a couple of days coming which do tend to still be bullish, and then somewhere around about the middle of the month we get this little dip. So really, that's this week. So this week would suggest that we could be getting a dip back up on week 3, and then if we're down on week 3, then we look into buy into it on week 4. The last couple of days are a little bit of a misnomer because there's not quite, you can see here on 20 there aren't always 20 trading days of the month, so it makes the numbers a little bit skewed, and 19. So we're really looking into day 18. So this is where it would start to pick up again. So towards the end of the week it starts to pick up again, but towards the end of the month it starts to pick up, but we get a dip somewhere around about the middle. So that would suggest that we need to be buying in April, but it doesn't suggest necessarily that we'd be buying this week. We'd be probably looking for it to retrace a little bit, stabilize somewhat, and then maybe looking into buying into it towards the end of week 3, maybe, and into week 4. Now, obviously, that's got to come in line with news and data, so that's just a soft marker. But I think it's an interesting one and well worth kind of bringing up.
It is interesting, and you've done all that.
Yeah,
you've tracked that, or is that?
I tracked it, mate. Yeah, because the you know, and this is the thing. There's not that much out there for the FTSE. There's not that much detail out there for the FTSE, unfortunately. So so really to kind of get really into the real news and data, you kind of have to do it yourself. But as I say, it's not a problem because it does give you an intimate relationship with whatever you're trading, you know. So I think it's well worth people doing it if they're looking to trade a specific currency more than anything else.
Agreed. So today we're looking for no entries. We're looking for maybe consolidation. And
I think so. Yeah, I think so.
Yep. Okay. Open. We're now open. What's going to happen?
I mean, it's possible that we could get entries. In saying that, we could get entries, but the market would have to come down, you know, maybe down to the weekly pivot, and we could look to take a long there. And it's possible, actually. It is possible. We had such an overblown extension into last week that there's every chance that we could actually start to see some downside.
Okay, cool. I've got a few things that that may well be in the offing here today, and I've already been through the euro. Should I go through a couple more, maybe?
Yeah, let's have a look.
Okay, screen. So we've done the euro. We're looking for a buy, but we want retracement first. So, or we want to break and retest this first. So that's where we're at on the euro. Now I'm already short the Aussie. I got short on Friday, and just happened to be in front of the charts. Oh, was it Friday? Thursday? Can't remember. It must have been Friday morning. I saw something and traded, and it was this thing here. We had a classic false break coming back into the range. Where did I enter this? Here. Maybe, I can't even remember what I entered on now, mate. That's a bit weird, isn't it? Because there's so many setups. I think it was maybe this bar here. It was this bar here. I entered on that bar there and put my stop up here above the highest swing at the top of the range. Just held on, mind you, through Friday trading before it came back and put us back into the black. So not a lot in that at the moment in terms of profit, but I am free trading this. I've moved my stop a little bit tighter, having taken some profit off the table. And at this point in time, there's no surprise to see a bounce back off the monthly pivot and indeed the weekly pivot. The reason I'm short here is pretty much just playing the tops and bottoms of this range. That's it. So I'm playing this one here was a lower high, or I figured it was going to be a lower high, and simply placed the order. As I say, put my stops up here, well out of the way, and that's proved to be okay thus far. There's nothing to rave about. There's no massive profits to be had here yet. But if we get down to here, which is where I'm really targeting, then that will be a different story. We'll be happy with that. In terms of really a bias, I'm actually biased in the opposite direction, would you believe? And that's continuation of last week's analysis, which was, okay, we've come off the monthly pivot with a tweezer top, but we couldn't even get down to the support level. We have now. We finally got down to the support level, but we've come straight back off it. So really on a medium to longer term basis, I'm bullish based on the fact that we really didn't drive down off the monthly pivot. So the way I read that is perhaps something else is happening if the bears aren't in charge here. And for all intents and purposes, you know, that's gone anyway. We're in a completely new, different ball game, and whatever is going on here is not driving the market too far. As you can see, we've gone into deep consolidation, and we've kind of been hanging around this area for some time. So it's a bit of a 50-50, I guess, from here. So I've tightened up the range, as you can see, and I'm now just willing to trade from top to bottom, bottom to top, until it does decide what it wants to do. So let's just play that game, I think, and that's where I'm at. Playing off the top right now, and if we get to the bottom, I'll pretty much close most of the position and look to trade to the top. And still with that bullish bias, I guess, based on what I said before, but I'm just not convinced that there's anything to be read in here now. It's pretty much a non-event. So the Aussies each way in short term, but I'm thinking drive down to here, then look back to the top or towards the top. We shall see. Aussie yen is in a beautiful position. I'm just waiting for a lower high, and if that were to come today, that would be pretty cool. It's probably not going to come off a 4-hour chart, but what I'd like to see is price get back up towards the daily pivot here, even retest it and give me a nice lower high based on this high here. That would give me the false break indicator that I need, and then I would look to trade that short, similar to what I'm talking about on the Aussie. So playing from top to bottom. Now, interesting, Ash, you were talking about the yen numbers being weak, and that doesn't necessarily agree with my technical analysis here. So I'll kind of take that on board, and unless I get this a very nice setup, then I probably won't look to take that. But it is looking pretty cool there in terms of top of range to bottom of range, which is, you know, the way I like to play it. So all looking pretty fine for a short there from a technical point of view. I'm just waiting for that lower high to appear, and away we shall go. And look, that could come on any time frame. If it comes on the shorter, smaller time frames, happy days. It may even come here in the next hour or so. I think I'd be inclined to take a position, but it would be a small position, because I do see this area here as the area that I'd like to see price get back to on the bigger time frames. But if you have a look at this, we've really had, this is an hourly chart, we've really had, you could call it a head and shoulders if you like. It's probably not that, but you know, on a smaller time frame, it kind of looks that way.
Yeah, I think it does.
Yeah, it'll kind of pass. And then we've had a break of the neckline. We've had a retest of the neckline, and so we've fallen away. You know, there's nothing mysterious about that. The only, I guess, issue would be on Friday afternoon, nothing really happened. I'm guessing that was NFP that drove us off the top here. If not that, certainly those two candles would have been NFP time. And really the market just consolidated around the daily pivot thereafter, getting back to, you know, the commentary that I often have around the NFP figure these days. It's not the driver that it once used to be. It's not the catalyst that it once used to be. That said, it looks as though it may have started a trend on this cross. So it's it's hard to really back up what I'm saying about NFP when you look at something like that. It's a smaller move, I'll put it that way. You know, before NFP on its strength, on its stronger days, would have just gone bang straight down. You know, there's no mucking around here. Let's get out of here. It's different these days, in my opinion. That said, I missed the number by 94,000 employees.
Oh yeah, we had a little bet, didn't we?
Yeah, we did.
Yeah, you were very close, mate.
No, what I said 290, didn't I?
Oh yeah.
I was 94 out. But I think I was a little bit tongue-in-cheek with that number, to be fair. But we've gone back to par. And you know, interestingly, Ash, you and I agreed at the time. Let's take a look at that. Remember, we said last month that I'll swear in a minute, that the NFP number had to be wrong at, what was it, 20,000, I think it was. It was 20,000. Let me go back to March. Wasn't it on March 2nd? It should be.
Oh yeah.
Was it March 9th? It was March 9th. What year am I? I'm in 2018. No wonder I can't find it.
Yeah, there was a bit of an anomaly, wasn't there, because of because of the shutdown, the government shutdown.
Yeah, they posted 20,000, which I said, and you agreed with me, had to be wrong, but it's still there.
Yeah.
So I thought I saw that change. I thought they'd adjusted that, but obviously it's still there. No, I'm wrong. We'll go back to where I was. So the number hit was indeed 196,000, and that is around about a par mark. Ah, there it is. There, see, they changed it from 20, and it's now saying the previous month was 33. That's what.
Yeah. Yeah.
So what's going on? What's right here?
Well, I guess the 33 is probably probably more accurate. I think interestingly, when it came down to NFP, it was the fact that we had that government shutdown did actually kind of skew those numbers a little bit, because it probably wasn't an accurate reading either way. So I think we probably start really from this last one. You know, we probably start from Friday.
Yep. So anyway, that's around about par, as I said, and really the market wouldn't move too much on that number. One wouldn't have thought. And going back to what I was saying, that's probably the case. What am I looking for? Well, again, I'm looking for that nice lower high. If this is phase one, then I'm probably looking for phase two of the breakdown. So anywhere here is fine on an hourly chart, but it won't be at full risk, because on the bigger time frame, as I pointed out, the 4-hour time frame, I'm still looking for that lower high in this vicinity. So I'm not fully committed at this level to go short. We shall see. But you know, generally the first retracement is a good one. So I'll be okay to get in here on a smaller time frame, just not 100% full risk. That's all. So that's Aussie yen. Interestingly, let's talk about dollar yen. Now, dollar yen, as you know, the week before, we took this long here as a false break of this trend line at the pivots. Interestingly, we've had a break of the resistance trend line now. We look like we're consolidating in this area. I'd like to see this candle today close above the trend line. Let me go a bit tighter. Yeah, I'd like to see this candle close above the trend line, and then tomorrow close below the trend line. But not only the trend line, the weekly pivot and the daily pivot are going to be there, and then retest the confluence area. So on Wednesday, I'd like to see 2 candles above the trend line, 1 candle that's broken back below it, and then on Wednesday retested both. On Thursday, I would then place an order short. That's probably asking a fair bit of the market. So I probably have to creep down a time frame or two and look for that to happen on a smaller time frame. So look what I see when I actually go to the smaller time frame, that being the 4-hour chart. I've actually got a break of this trend line. I've got the weekly pivot here, got a break of the weekly pivot. I'm now retesting the weekly pivot, and with 1 hour and 46 minutes left to go, if this candle were to be, let's say, well, ideally it would come back and test the daily pivot. That would be super duper. But if it were to come back to here, say, just around about the DS1 level, or even this high here, making, I guess, a little bit of a head and shoulders there. If that were to be the case, then I would place a short underneath here. It's risky. Why? Because we're trading straight into support. That's why. So it's not the best. It's a very early entry, but it's not the best entry. The best entry would be if is to allow time to go past, and get something over here that does form a right shoulder, if you like. Then look for the neckline, which would maybe be through here somewhere. Got a confluence over here with the trend line, but this is shaping up now as a false break. So I would look to play that if it does happen. But the better scenario here would most definitely be to wait and get the right shoulder over here, and then look to trade it short as a result of that. But I'm keeping my eye on it, definitely. Dollar yen short. Now, I'm not committed to the to the bears, I'd have to say, because we are now really, if you have a look at the 4-hour chart, we've really turned the corner here. We've come off these bottoms. We've put in higher low, higher high, higher low, higher high, higher low, higher high, higher. It just continues to be the case. And we still haven't taken out the most recent higher low. So really, it's still bull mode here. Interestingly, what we've got now on the other side of things is a double top formation. And that lower high that I said I'll be looking for over here would be the best case scenario again. But there is a riskier trade that may come up, and we'll keep our eye on that. And I'll let you know how I'm going towards the end of the show. The only other ones I'm really interested in, I'm not committed to the pound. I'm not committed to the euro because of what's been going on. And we haven't mentioned, well, I mentioned the B word earlier. I think it's probably time we put it back into the show, Ash, because we can't really deny it. What's going to happen on Friday, mate? Or is Friday now down the track? Where are we at?
Yeah, but quite probably is going to get pushed down the track. I mean, it's so difficult now because the Labour Party and the Conservative Party have decided to get together and discuss other possible ways of exiting the European Union. But there doesn't seem to be a lot of movement on that. Brexit is a little bit of a risk of not happening at all. I think there are some MPs that are even saying that they would revoke Article 50 if we are looking to head for a no-deal Brexit. So there's plenty of votes in the House of Parliament this week, and I suspect
by hasn't been on the table for a while, has it? I think we were talking about that a few weeks ago. And
well, yeah, there was a petition that went round that a lady put together in Spain, and it just kind of went viral, and I think it ended up near sort of 5 to 6 million. 5 to 6 million signatories on that petition to revoke Article 50 altogether, stop Brexit altogether. And there are some MPs that are saying that they would be okay with that. I think it would be a I mean, it just seems so pointless to me because, in some respects, if that's how you felt about it, then really that may be the way that it should have been in the first place. But of course, nobody really knew that this is where we would be. The public vote seems to be gathering more momentum. It hasn't got over the line just yet, but it does seem to be gathering more momentum. And when it comes down to the public vote, the interesting thing about that is that really what democratically the Remainers on the for the public vote to ratify the deal, if you like, the way that they see it is it's not a second referendum, it's ratifying Theresa May's deal. They want the British people to give the green light to the deal and have Remain on the ballot paper or the deal. But actually, when you really think about it, if the UK has voted to leave, what really should be on the ballot paper is leave with no deal or leave with this deal, because that's all there is on the table. They've already kind of discarded remaining the first time round. So even though that's not what I want by any stretch, and if Remain was on the ballot paper again, I would vote for Remain. But it doesn't mean that I think it's right. I think what is right and fair is to say to the leavers, you guys won, so how do you want to leave? This is how leaving looks. Do you want to leave with this deal that we've got, or do you want to leave with no deal? Because Remaining really has already been voted down, the first time around, and that would be running the referendum again. And it pains me to say it because that's not what I want, but that's really what is fair in my opinion. But that's very unlikely to happen. There's just no appetite in Parliament to leave with no deal. There was a 1 MP majority to take no deal off the table. Just 1 MP. It was something like 230 to 231 or something like that in favour of taking no deal off the table. So there's no majority in Parliament for it, and for that reason, I suspect that something else will happen. What could happen, and what people have said that they would vote for, is Theresa May. The one way that she could save her deal is by putting the fact that the UK people will ratify her deal. So a lot of MPs have said yes, we'll vote for you, but you have to agree to the second referendum for the people for it to go back to the people to say that they want your deal. And if you do that, just about every MP in Parliament will vote it through, and then she will, she will get her desire, and she will be the Prime Minister that managed to get Brexit, certainly her part of the deal, voted on in the first time around.
So
The problem
becomes not back to do we go, do we stay, but how we go,
or do we stay? I mean, this is the thing, what they're talking about putting on the ballot. I don't think that's right, but what they're talking about putting on the ballot paper is Theresa May's deal will remain.
I wonder if there's a difference in this case between fair and right. Fair, yeah. I get the fair bit, because you're actually overthrowing something that's been voted on if you go the other way.
Yeah.
But the right bit, I'm not sure. What is right for Great Britain?
Well, what's right here for Great Britain is that we don't leave at all.
There's a difference really between right and fair, then, isn't it?
Yes, there absolutely is. There absolutely is. And the thing that doesn't really get focused on that much is that I don't hear it so much about the Remain side of it, apart from there's a few Leave voters, but they don't really have too much evidence. But when it comes down to the Leave side, there is a whole slew of evidence that they ran an unfair campaign. There's evidence that there's Russian money involved. There's evidence that the claims that they made are just not going to happen. So there is another aspect to it, where you could actually argue that why is it fair when there was so much falsehood going on and I suppose dirty money involved in the campaign. So yeah, you certainly could argue that that it's you could still argue that it's fair that the second referendum should be actually brought back to the people, because they genuinely didn't know what they were voting on the first time around. It does suggest that people were stupid, but nobody mentioned Northern Ireland when they were talking about the referendum the first time around, and that is the biggest sticking point. So it just goes to show how important that particular aspect of leaving is.
Read the fine, but there wasn't any fine print.
No, that's absolutely right, mate. And the thing is, you're asking me what's going to happen this week, and the truth is, I just don't know, because by now something should have already happened. So the fact that we are in the we're not even in the last week anymore. You expect this stuff to be done in the 11th hour, and the government was saying the whole way through, everybody will shift in the 11th hour, and then it will get we'll get a decision at that point. Well, that evidently hasn't happened, because we're now in the 12th hour, and we're the 12th of April is already the second date that we're meant to leave. Now we didn't manage to leave on the first date, so it's very unlikely that we leave on the second date. They're talking about a flex extension, which is being flexible on the extension, so the extension happens and you can leave at any time within that particular period. Donald Tusk is talking about that. The French Premier Emmanuel Macron is saying that is not acceptable, and if you're going to have an extension, then you need to know what are the terms of the extension, what's the plan from there on in. So there's a lot of bravado and posturing going on, and probably playing to their own audience to a degree. So nobody really knows. I mean, it's very, very difficult to know what's going to happen. But what may happen is that Theresa May eventually buckles and says, "Okay, Jeremy Corbyn, leader of Labour Party, you can have the second referendum." The slight issue is that he's not that keen on it himself. He's a Brexiteer, really, Jeremy Corbyn. He's not a Remainer by any stretch. So it may well be difficult for them to push this thing through one way or the other anyway. So yeah, it's difficult, mate. It's difficult to know. I think it's going to get kicked down the road. Theresa May's got a big problem, because her doing a deal with Jeremy Corbyn is not very good for the rest of her party. And there are hardline Brexiteers and even softer Brexiteers in her party which say that, you do a deal with Jeremy Corbyn and the party's all over. You know, it's gonna break things up. Theresa May is onto a loser whichever way this goes now. You know, she's not. Yeah, she's not going to be able to get this done in the correct way. So
can we trade this week? Can we trade the FTSE? Can we trade the pound? Can we trade the euro?
Well, it's interesting that you mentioned the FTSE, because of course, if the pound weakens, then the FTSE is very has a high probability of strengthening. But let's have a look at the pound and see what we've got. And we'll have to look on the longer term timeframes to see where the areas actually are. When it comes down to the pound, we are in a buy zone. Really, that, you know, this area down here is a buy area. It's not somewhere that I'd be too comfortable selling. We've managed to hold and refuse this area a couple of times now, and you know, there seems to be a trend line along there. Seems to have bounced along that trend line as well. So there is a buying area here that that might promote some longs in the pound. Not that I'd be too keen to take it. If I was going to take it, let's just talk about the potential technical aspect of this, and try and forget the Brexit negotiations. If I was going to trade this, then I think the next 4-hour bar is quite interesting, because what we currently have going on. Sorry, the next 1-hour bar is quite interesting. What we currently have going on is a bar which is fighting to try and get up, and there is a little level down here. Now it's a pretty steep angle, but it does look like it's bounced to that particular point. Now, if we bring in some pivots as well, there is a daily pivot there. There's also a weekly pivot there, so it could get trapped in this particular area. The daily, the weekly, and the monthly are pretty locked in together, aren't they? They're fairly close here, so so it may not help. But that does look like a bounce point to me. There seems to be some confluence. There seems to be the daily pivot there as well. I think a bullish looking bar here would suggest that there is enough evidence to set up for some upside.
Close above the weekly pivot. It's kind of almost tradable, isn't it?
Yeah, I think it is. I think it absolutely is tradable, because it also takes out this area of resistance as well. You know, if we do get a close above the weekly pivot. So yeah, I mean, it would be too much of a gamble, I think, to take it before that particular point, even though there is quite a nice pattern here, depending on what this bar does. It's too much of a gamble, but I think putting some buy orders just above the weekly pivot, I think that could trigger in a whole load of confidence in the market here in the pound. So yeah, I think you're right, and I think there's going to be twitches and whispers going on all day. The government are meeting Labour again today, so that we might get a news release at any point. That's the difficult thing for us, is that we're probably needing to wait for a news release before we can trade it, but that might actually result in the fact that there's no opportunity to trade it, because the news release might actually just pick this up. However, I don't think that we're on too much of a delayed feed than the rest of the big market makers. So as long as we're on top of it, I don't see the problem with trading this when we get some sort of press release. Because if there's a press release, then you know, the BBC, Bloomberg probably will provide a live feed. It might be a few seconds delayed, but I think by the time the press release is given, then I think we'll probably have a few seconds, not long, but a few seconds to make a decision about this. And if we have a setup and then we get a press release which is positive, I don't see the problem with buying the pound. Selling the pound, I don't think would be a good idea because of where we are. But I think if the press release, so I think we just look for upside. But so I think if that press release suggests upside, I think we can be fairly comfortable that we can take that on.
Yeah, look, there might be a little play here on the hourly or the 30-minute chart, but I'm just having a good look at that now. I reckon I can nearly take profit before the weekly pivot and get myself safe here. You show you? I'll show you.
Yeah. So look.
So my big thing right now, if you are going to play these pairs, is get some money off the table pretty quickly because of the potential for volatility and unpredictable volatility. But when I look at this chart, the 30-minute chart, and I'll go a little bit wider, you can see that we've come off the bottom again. So the bottom being in this vicinity somewhere, with a a beautiful bar right here, and that's followed up by a higher low. So we've gone into phase one. We're retracing. This is where I always say the money is, in phase two. And phase two for mine is pretty clear back to the monthly pivot. So I really don't want to miss this if it does set up, and that 30-minute candle's just closed. The hourly looks better, I've got to say, but I'm not sure I can wait for that. So let me have a look at this. Yeah, the thing I don't like and I don't trade is this bar here. So effectively what we've got is a high test bar and a low test bar together. That to me means this could go either way easily and take out the low or take out the high very easily. So whilst I can see an entry here with a stop here and taking profit here, moving your stop to wherever you take profit. So in other words, if I were to enter here and take 8 pips of profit before the weekly pivot on a 20 pip candle or something. Yep. So it's less than 0.5 to 1 for your first take profit, but I'm okay with that if it makes me safe in the market. I would then move my stops to around about here, which is kind of the open of the bar, and I think I'd be okay with that, except I don't trade this combination of high test, low test. So if I wait for the hourly chart, I'm going to have exactly the same scenario. So let me go tighter, and I will come back to this at the top of the hour. I will place an entry long here, and I will put my stop here, but I'll definitely take profit just before the weekly pivot. So I think there is a trade there, and the target's very obvious. It's monthly pivot on the smaller time frame. Then what I would do is go to the 4-hour time frame and wait for a higher low here. So we've got a double bottom. I'd then be looking for a bounce off the monthly pivot, maybe even back to the weekly pivot, and look for a higher low here, then trade it long into these areas. So that's kind of where I'm at. It looks pretty clear to me from a
I like it, yeah. I like that. I think that's a really good strategy. I mean, let's just have a quick look to see. Just incidentally, the market, the FTSE 100 has opened up in bearish breadth. Actually, there's only 30. There's one of the market we need to talk about in a moment, but we're looking around about 42% of stocks in positive territory. There's about 4 that are flat, and around about 53% that are bearish. So there's some slight bearish momentum in the breadth in the FTSE 100 today. So I think looking for some downside is looking a lot more attractive now. Yeah, so I like that. I think you're absolutely right with that with the pound. I think that there's certainly a possibility of some upside. Now the fact that the FTSE might well be showing some bearish breadth and certainly bearish price action as well would promote that with a pound. Depending on what this is about, it does appear to be maybe more about world economic states when we consider what we just saw with Japan. But everything else does suggest that we could be looking for some downside. Looks like we're just starting to create some sort of lower high here as well on the hourly chart. So I think looking for shorts in the FTSE might well be on, and looking maybe around about this daily pivot could be on. So I might take a trade in it in a moment, but let's see what happens with that.
Okay. If we're looking for pound strength, then maybe pound yen might be a go as well, given that we're talking a weaker yen.
Great idea.
Not sure I'm happy with that. We've got the 3 pivots, bang, 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 dead
Yeah.
ahead. Doesn't look
like no. I mean, when I look at this pound yen, yes, gosh, that's going to be hard, isn't it? That's going to be really hard. So that doesn't look like an attractive possibility either. It's like a little trend line there as well. So, you know, taking these weekly pivots out, I suppose the same strategy could apply in as much that you know, you look for a break of the pivots with a dollar, and maybe looking for the break with the pivots.
Yep.
Again with this one, you'd probably want to break in a back test before it hits this trend line to try and trade it up to the trend line and possibly then beyond.
Yeah, I think so.
Anything else? Well, do you know the other market that we were looking at last week, which I was really keen on, was the Aussie CAD.
I'm just looking at that chart now. Yeah.
Brilliant. Okay, because I mean, I don't know if you're short on it or long, but the short was the play last week, you know, and it was just waiting for an opportunity, and that is there, isn't it? That is screaming. When we look at this, I wonder if we could take this actually. I mean, the weekly pivot's a little bit problematic, but we were talking about this as a daily wave rider, and I want to just see whether the daily wave rider is now set up, and we'll discuss the fundamentals on this in one moment.
What chart's that? 4 hour.
That is the hourly.
Oh, hourly, right? Okay.
So daily wave rider. Here we go. Well, we got proprietary indicators are looking for downside. We got a step down here as well. I think the fact that that last week's daily bar would need to be probably nullified by today, but that would be, in my opinion, that's looking maybe a little bit late. I think this could be a trade, especially if we get a close beneath the weekly pivot, which we'd probably need to see. I think I'd want to see that first, and that would also confirm the close below the trend line as well. So maybe a close below the weekly pivot and a retest of it, and then we're looking for downside on shorter term timeframes. But this one looks really good, and just bringing in the fundamentals on this one as well. There has been some news from Libya. Now, I'm not exactly sure what it is, but I know it's oil related, and because it is oil related, I think this brings in the WTI, which has got another booster forward today. Actually, not too much. It's started to level off just a little bit, but the fact that there seems to be some negativity from the news in Libya, and it suggests that there could be another squeeze in oil production. I think this looks like a pretty attractive chart, you know. So WTI moving forward, it would probably need to get a little bit more of a boost than that. Also, last week we had some fairly hawkish sentiment, not massively, but the Canadian government was certainly the most positive of most of the banks. The Australian government wasn't particularly positive. We've had some weaker job advertising going on, which could be telling from Australia. And did we get anything else? Yes, we did, didn't we? On Friday, we had non-farm, which is going to affect the CAD. Unemployment rates from Canada wasn't any big change. The employment change was a problem, you know, and that may just douse the flames a little bit. And you know, if that hadn't happened, I'd be all over the CAD.
Yeah, I think as long as the rate hasn't changed, you know, it hasn't gone up, I think it's not that big a deal. But it's no question, it's a deal.
I mean, considering this number, and they were looking for a dip, and it has gone into negative territory as well. So that's the only thing that would douse that. So let's have a look what might drive it.
There's also a play on this that I'll point out to you as well.
Not home loans. Maybe this. Maybe the governor speaking on Wednesday might give us a little bit more clarity on Australia. That yeah, there's a few speeches this week from Australia, and that may be the thing to that may be the thing to look for. So we're probably looking at Wednesday for some potential Aussie weakness, which does actually fall nicely into the category of waiting for a setup on the daily wave rider for the Aussie CAD as well. When we bring this in, I like this bar here, but just because of where it closed is my issue with it. But I do like it. You know, when I bring in this trend line here as well, that would suggest that we probably need to see price action comfortably below this point here. So there's a couple of points, aren't there? I mean, when I look at this, there's a trend line here. There's a trend line here which we're just about below, which is positive. Bringing in the pivots again. This looks like the trend line around about here. Bringing in these pivots again, just you know, locking under here to this particular point here. There's another little hourly trend line along here. I'm not exactly sure where it is, but it looks like it's somewhere around about there. Would also suggest that if we get a close below that level, then that would be a trade on. So the Aussie CAD would be my #1 choice for the week, actually. I really like this one.
Well, you know, of course, how I look at that chart. It's similar but different. And what I see is not the trend line you had really there, but this one. Let me just switch to my chart.
Yeah, you're on, I think, mate.
Yeah, it's only on the fact that I'm chatting. Now it should be there. Okay, so the way I look at this is let's go from the daily point of view. And the daily point of view is pretty clear. We've had a bearish engulfing bar backed up by a reversal bar on this resistance trend line, but not only the resistance trend line, there's also a horizontal level going through there that's pretty clear. It's in that vicinity somewhere, right? So that's giving us confluence. It's giving us rejection here. So really the current momentum, in my opinion, is definitely short. But when you've got that kind of momentum, it's pretty tough to just jump in short without something that is significant like this, a lower high, and here's the momentum here. So I'm looking for another lower high. So we've got momentum this way, now we've got momentum this way again. I'd definitely be looking for a lower high, but that plays straight into my hands if I look at the hourly chart, because the hourly chart for me is showing me a potential false break of this trend line. That's what I look at here. So I've got, again, momentum down, retracement, momentum down. I want retracement. One bar does not retracement make for me, but maybe there's 3 bars there. So this could be wrong. This could very well be wrong, and we may well go straight down here. But I've also got an untested daily pivot above me, and the probability of the daily pivot being tested is high. So therefore my bias, short term only, is for price to get back to here. Give me that lower high, then look for the short. The question is, can I trade that to there? And the answer is yes, I can. Because I've got the break, I've got the consolidation, I've even got a bounce point in the weekly pivot that we've come back above again. The ideal situation here for me would be is if this candle closes bang on the weekly pivot or just above it maybe, then I can place an order long here and trade to there and just close the trade. And then look for the shorts I'm talking about on the 4-hour chart, because we've then had the retracement that I'm looking for, and lower high here gets me interested in the short. So it's very, very similar to what I described on the pound, really, just a little bit different in terms of direction, I guess. But that's exactly how that's setting up for me. So in 15, 16 minutes time, if that looks like that, then yes, I will place an order long and close the trade at the daily pivot. Bang, done.
Yeah.
That'll be the short-term trade. So like I said, there's a few things going on here. I hate Mondays trading as a general rule, but this could well be okay.
Yeah, I quite like it. I like it, mate. I mean, I don't see too much else out there, but I will have a quick look just to see if there's any other daily wave riders that qualify. I never look through filters. Dollar yen's going to be on people's list. Euro dollar. Now we should talk about the euro dollar as well. I know you've discussed it, but euro dollar is I think a really tricky currency pair at this particular moment, because there are signs and signals for some further downside, but there's no doubt about it. This is not in a buy. This isn't in a sell zone.
Yeah, it's in no man's land right now.
Yeah, I mean it really is. I mean, if anything, it's probably in a buy zone rather than a sell zone down here. We're looking at this on a monthly chart. The only thing that we really have now is this this horizontal level, which is pretty scruffy anyway. But it continues to be battered against, doesn't it? And actually, the numbers from the States weren't that good. You know, they weren't exactly stellar numbers from the States. The employment numbers were really good, but let's bring in what we've got from Friday and just talk about that a little bit, because
Yeah, it was
I
just
think this is
it was a par round for the
yes.
for the dollar, really. Nothing to get excited about, nothing to be terribly bearish about either. So
No, absolutely right. I mean, it's I think this is the key number here. You know, the average earnings, because the issue that the Fed have got, and you know, if we are looking for strength in the dollar by increasing interest rates, the unemployment rate and the non-farm payroll is going to help, but not if the average earnings are diminishing as they are. You know, 0.1% for average earnings. That means that the workers out there would probably not be able to handle a rate hike. Now, Donald Trump has already come out and said that he believes that the Fed should be bringing the interest rate down, and we're going to get. Is it this week we've got? Any Fed? I can't remember if we got any Fed announcements this week.
we got the minutes from the last meeting. That's all.
Okay, all right. So, so it could be on hold somewhat, but Donald Trump's saying that, but that doesn't mean that people will listen to Donald Trump. But certainly, the average earnings don't really give a great picture for rates increases at this particular point.
Yeah,
So, because of that,
when the other developed countries are not dramatically but steadily, well, the wages are increasing.
yes.
If this is on a downward trend, that's not good. That's absolutely right.
Yeah. Well, this is the thing. I mean, you know, if those other countries are not able to raise their interest rate, then it does kind of leave it in high noon, if you like. You know, what's going to drive either one? But it doesn't appear that the dollar will be going up. So that would suggest that unless something happens in the euro, which is negative, then this is probably going to stay where it is. And we have to really bring in Brexit as well. You know, if Brexit is going to make a difference, then it's going to make a difference to the euro. And for that reason, and for that reason alone, it would suggest that that there could well be some positivity if we start to get that deal coming through. That's a bit concerning, the fact that we closed under there, not with any real enthusiasm, but we have closed under this particular line as well. There's a couple of lines here that we'd have to consider and look at, which could suggest that that the euro still is in a really problematic point here. So really, for the euro, the way I would see it, we're going to have to start getting above probably 125. 126, but before we're looking at any bullish price action. And as I say, what is it that's going to take us up there? I don't know what there is this week, but let's have a quick look at back at the
weakness. I think that's definitely right. We've got ECB press conference, of course, and interest rate announcement.
Okay.
So that's likely to be a driver in whichever direction, you know. it's no fait accompli. But I think,
No.
you know, my short term on the euro is bullish.
Yeah.
But I really don't know where that can take us. I don't see it.
Yeah. Well. Is there a possibility that people buy into this this particular press conference, and then when the press conference happens, they start making choices? Because we are in very we are in a buy zone down here, as I say. I mean, it's bearish territory, but we are in a buy zone. So if we can take out some of these numbers down here, then is there a chance that we could actually start to rally into the press conference, and then maybe the press conference itself takes us either further to the upside, or maybe starts to push us back down as the enthusiasm is suppressed? But you know, the fact that we have got a press conference could suggest that that there's going to be some positioning going on here.
Yeah, look, and technically the 4-hour chart showing us a buy signal. You know, it's no mystery that there'll be buyers around here.
Yeah, you're absolutely right. Actually, there's a little inverted head and shoulders down here, isn't there?
Yeah.
And that looks pretty clean as well. It's got to get above. It's got to get above the shoulder. It's above the daily, but yeah, absolutely right. This is pretty good, actually, isn't it?
Yeah, look, I've got one ready to go if the 4-hour chart closes as I see it potentially will, and that is the current bar. If it were to close on or just above, or even just below the daily pivot, I think there's a trade there straight away.
Yeah, I quite like that. I certainly think taking out the neckline is the safest play for anybody that's not too experienced here.
Always, but there is a little trade up to there, I think.
Yeah, I completely agree with you, because you know, if you can pick it up on a right shoulder, you're in a really good place, because it would suggest then that that some profit taking could be on the cards on that neckline.
Yeah, myself.
And then yeah, and see if it can actually go through. Let me just change this back to a daily. Not a daily. We want the 4-hour, don't we? So what we have here is that left shoulder, and it does seem, certainly, you know, from the perspective of the FTSE, that the market is just a little bit calmer today. It looks like there is a bit of profit taking going on. So maybe some profit takings going on with the dollar, but you know, picking it up on this right shoulder with a signal, you know, the fact that we're kind of we're testing this level and rejecting it, would suggest that the buyers are quite happy to maybe trade it up to that point.
Yeah,
there's enough room there.
Line coming through there as well from your last touch. I've lost the chart now because I'm talking. Hate that when that happens.
Yeah, it's annoying, isn't it? James did say he had a fix. There we go. That to see if that helps even when you talk. I've just selected it.
Okay. Yeah, that doesn't seem to work at all.
Okay.
Bugger. I'll show you in a minute when you're finished. My trend.
Yeah, no, go ahead, mate. Go ahead. That was just pretty much the analysis that I would have, is that you know, the safest play would be let the neckline break, and then on the retest, then try and take it to the upside. Yep. But there's certainly a case to be made to try and trade it up to the neckline, take half off, and see if it can then go. Yeah, let's have a look at yours.
And that play would be for me. And there is the neckline. I've got exactly the same neckline that you have, but I've also got a trend line coming through here. And we're bang on that, and we're bang at DR1. So this would be a very risky trade in that regard. But if the candle plays ball, the 4-hour bar that I've got now, it's also a setup that I like to trade in terms of candle patterns. We've also got a little bit of a shot over the bow here, I call it. That's a hit and run situation. So we've hit the trend line, we've run away from it. That gives me the impression that if price were to come back here, it would go in the opposite direction. Got a beautiful target up here if you want to play a short term. But I would be taking profit here at the neckline, no question, exactly as Ash has just said, and then let the rest run. If we get through here and retest it, that's where I'd load up at that point. So looking for enter here, stop underneath that bar, close probably half of the position here at the neckline, allow the break to happen, still stay in the market, no problem with the second half, come back to here, and then load up at that point to go long. That's your phase 2, and that's where you want to be. You want to be in that one. That's the one that makes money.
Yeah.
So
yeah, I like that.
That would be my plan. That of course would take out, well, take out this stop, and probably this stop would be under threat as well. But I've made enough money on this trade not to even be concerned about that, and I've made reasonable money on that one as well. So I wouldn't be concerned about either of those stops being hit. I just play what I'm seeing. It's as simple as that.
Yeah, I think I like the plan. So we're really looking for long euro. We're looking for short Aussie CAD. We're looking for short FTSE 100. I'm just waiting for the daily pivots on the FTSE 100 to truly get rejected. I'd like to wait for the hour to close. The pivot has been rejected once. We do seem to have what looks like a fairly bearish looking bar here. So the way that I'm looking at this FTSE now is that there is a short opportunity at this point here. So it comes back. It's broken below. When it comes back up to this point, I think there's a short opportunity at 73.72. So on the cash, it's going to be around about 74.36, 74.35, something like that. And I think there's a short in the market from that particular point. So just let the hour close and see if you can get a little bit of price action to the upside at that point. Then I think we start to look at the shorts.
Yep, cool.
Okay, mate. Well, we're back in half an hour.
No, that's changed as well. Hang on a second. I'll adjust that or get that firmly fixed in my mind. I'll show you this pound trade again.
Oh yeah.
That looks as though it will happen. We've got 3 minutes to go. As long as this doesn't take out the high, I'm happy to take this position. And just repeating what it will be long above this bar here. So let's go. We'll go with half a lot here. It is risky, as I said before. It'll be a buy stop. And the entry level will be 130.63. So 1.3063. Now your take profit level is going to be at the high of that bar, which is 1.3071. I won't put take profit in there because I'm only going to close half of the position, right? So I'll give you that first take profit level again. It is 1.3072, sorry, 71, 1.3071. So potentially you've got 8 pips here of profit less your spreads, and close half at that point. Move your stop at that point to whatever profit you've taken off the table there. So if say you get 7 pips of profit here, move your stop loss 7 pips from entry. That will give you a risk-free trade. And if it does go up here, you close it at DR1. Don't even let it go to the monthly pivot. Close it at DR1, the level of which is 1.3107. And that would give you about 45 pips with a risk of 20. So that's not a bad trade if it does come off. Okay. Pound,
like it.
I think we can just about place that order now. Stop loss I haven't put in there. 1.3043. So 20 pips of stop loss, as I said. And 20 seconds before I place that. As I say, if that high is taken out, I won't place the trade. And the caveat here is, if we get 6 candles that open and close and this hasn't been triggered, just cancel it, because something else is going on, if that's the case. Righto, there we go. Righto, we placed the order. And don't forget, we need to take that profit at the high of this bar, if we get fortunate enough for that to be the case. So there we go, mate. We are just about to be long pound US dollar by the look of it.
Brilliant stuff. Okay, mate. Sounds good. Well, the FTSE continues to move to the downside. Not an opportunity, unfortunately, to take this as yet, but maybe there will be something that could come back to us. So, if the market comes back to the daily pivot, we are taking it short. If not, then we will just wait it out and see if there's a long opportunity, because that's what we're really after. So, let the market come back a little bit and see if we can take a long at some point.
Happy days. Just be on your toes here, guys. This could happen fairly quickly.
Great stuff. All right, buddy. Well, let's be back. So we are back actually in 2 hours. Is that right?
Yeah, that sounds right. It's
yeah.
Yes, I believe so. I'll catch up with you then, mate.
Okay, have a good one. Thanks, guys, for listening. Actually, didn't get any charts for you guys actually. So if there's a chart, Jeff might need to push off. But if there's a chart you want me to quickly look at, I'm happy to do it. I'll give you a second or two, but if not, just to reiterate, I know there's a few people that have just come into the show. Just to reiterate, we are looking for short Aussie CAD. We are looking for long opportunities on the right shoulder or the neckline more safely on the euro dollar. And Jeff has just placed an order long on the pound, and I'm looking for a short on the FTSE. Around about 10 to 15 pips above where we are right now. So looking for short FTSE, short Aussie CAD, long euro dollar and long pound dollar. The Labour Party have said their diary is open, so they just want to speak to Theresa May at any particular given opportunity. She hasn't arranged anything as yet, but their diary is open. So with some quiet in the market, we might well see some easing back to the upside with the pound as more news is awaited on Brexit, which we'll hopefully get by Friday. Okay, mate. Well, I'll speak to you in 2 hours. For everyone else, see you tomorrow. Same trade time, same trade channel. Have a great rest of day. If you're in with us later on as well, we'll see you then. And that's the wrap. Yeah.
See you tomorrow, guys.
See you later.